Hello and welcome to the Weekend Investing Daily Byte of 21st of August. Another day when market inched up, not in a very big way, but still inching up gradually and recovering from previous week's loss. Today we will talk about, have we reached the market peak or are we nearing it? Basis a lot of promoter sales, venture capital sales that are coming through, new IPOs coming through the market. We'll have a discussion on that. Please first subscribe to the channel. Where are the markets headed? Market is gradually moving back up to a new high. I have no doubts that we will probably go retest 25,000 very, very soon. So no complaints there, and markets are gradually moving up. Nifty Junior is also up 0.28%. Nifty was also up 0.29%, recovering from the loss of previous weeks. Mid caps did quite well, 0.4%. Now only a stone's throw from a previous high. So recovering from this base, and small caps have actually done the best, 1.1%, very near previous highs, and a fast recovery in the last four sessions. So good developments on the market. But the only dragging factor in the market is Bank Nifty, which is down 0.23% today. It recovered from a 0.9% drop middle of the day, basis worries on cost of deposits going up and the spread that the banks enjoy between cost of deposits and lending. That seems to be the worry for a lot of banking and for RBI as well, and this is causing some stress in banking. In terms of momentum trends on 20, 50, 100, 200-day moving averages, things are moving up. Today 20-day moving average has slowed a bit in terms of number of stocks trading above it, but 50, 100 and 200 moving averages are still gaining ground, so which is a good sign. Advanced decline ratio is also, for the fourth running session, doing quite well, so it's a good sign that advanced decline ratio is also supporting the up move. In terms of today's heat map, you had some greens in Asian Paints, Titan. So consumption stocks, FMCG stocks, these were the ones that were doing well. Banking, as you can see, was slightly short. In Nifty Next 50, you had again Varun Beverages, consumer non-durable space doing quite well. Some manufacturing space doing well. LIC doing well, and you had some softness in Zomato, DLF, PFC, REC, etc. Sectoral trends, FMCG, pharma, consumption stocks, metals, these were the ones which really were running today. For all sectors now, for the last 1 week, it's all in the green. So there's no sector losing in the last 1 week. Real estate, however, did lose 1.3% today, but it's looking quite all right for all the sectors going forward. Pharma, I would like to specially mention here, has been doing extremely well. Last 1 month, pharma stocks have run up 10.5%, the best amongst all sectors, and several pharma stocks are entering many of the strategies. FMCG was the sector of the day, hitting new all-time first sector to really come out of the last few days of downtrend and hit a new all-time highs. FMCG up 1.3%, and you had United Breweries, Varun Beverages, Dabur, United Spirits, all leading FMCG on the upside. In terms of stock spotlight, you have Alok Industries move up nearly 11% today. If you recall, the stock had run up hugely in 2024 January, and then of course there has been a long sort of correction, consolidation, and now potentially this is a new leg that's starting up today. If we see the long-term chart of Alok Industries, this has been sort of in the last 2 3 years not gone anywhere, but it has recovered from recent lows. Maybe this is now the time for a good setup, risk setup to go long here. Have we reached the market peak? Why are we saying this? Because a lot of promoters have been selling. So about 1 lakh crores of selling has happened already in 2024, and that for some is a sign of stock market peaking. So about 250 companies have sold stakes, 97,000 crores through bulk and block deals. Several of these companies are here: Indus Tower, Indigo, TCS, Emphasis, Vedanta, and so on and so forth. Usually, promoters will come out and sell stock when they feel that the market has overrun where the valuation is, or they really need the money for business expansion, compliance, debt reduction, personal reasons, or some strategic realignment. Also, some private equity venture capital funds may be exiting. Maybe the fund has come to an end of life, so they need to go to an IPO, or they just want to capitalize on bullish market conditions for partial or full exits. Exits have been absorbed well. I mean, there has been 3.9 lakh crores of domestic institutional buying this year, and the liquidity has been very, very strong. You are seeing very strong IPO pipeline all through. So this happens usually towards the second half of a bull market, you can say. The first half of the bull market, you won't see that many IPOs or rights or things of that kind. But in the second half, there'll be more issuance, more paper coming to the market, because all these smart players, see, all these are very, very smart players, promoters, venture capitalists, private equity guys. These are very, very smart players. They know that this is an easy time to sell, because some buyers may be doing a blind buy, given that everybody has made money, so everybody has surplus to deploy, or to rotate out of their own stocks, and so it becomes an easier sell. But however, you also need to see that markets, for instance, Nifty has come only 30% in the last 2 years, which is not such a big deal. Maybe in some small and mid cap segments things have really gone bonkers, but in the larger caps, at least, uh, 30% over 2 years is not really by any stretch any major bull market phenomena. So there may be much more to go. I mean, in the sense that while promoters are selling, a lot of IPOs are coming, there still may be a lot more to go, and nobody can really predict that. Even promoters cannot predict it. Even the smartest of minds cannot predict where the tops may happen, because the tops will happen when nobody is thinking of a downside, and that's probably not where we are today. I think in the times to come, we have some potential of volatility, given the US presidential election and the interest rate cycles getting cut. But India still remains a fantastic market. India still remains the one of the fastest growing economies. That probably will do us well. We only need the FII money to stop bleeding. That is the only sort of concern that at least I have right now. That domestic money is flowing in, but foreign money is not coming in. Maybe they will switch sides at some point, where domestic money stops to come in, and foreign fund flow starts to support the market. But to say that because promoters have been selling, hence equity markets are near any peak, is probably a stretch. Let me know what you think about this, and we can discuss it on in the YouTube comments. Thank you so much for watching. Bye bye.